Hey everybody, it's Pete. Good morning. It is Thursday morning, December 3rd, 2020. Today I want to start out with something a little bit different. The market kind of started out with a bang and then kind of just drifted, right? But I want to talk about something that's a little bit more of a day trading asset, for lack of a better way of putting it, a day trading method. And it's a market internal, something that we focus on a lot in the boot camp. And it's kind of like the engine behind what's going on. And if you could visualize this for a second, where if you can imagine that there's 1,000 stocks, just for argument's sake, we'll say 1,000 stocks. And at any one point, there's either buying or selling going on in those stocks. Now, obviously, if you had a way of looking kind of behind the market and saying, well, 700 of those stocks are being bought right now, and 300 of those stocks are being sold right now, you'd have a pretty good idea that 70% of the stocks in the market at that moment have somebody saying, I want to own that stock. You can actually take the difference between those two, where you have 700 stocks that just went up one tick, 300 stocks that made a down tick, and that gives you a plus 400 reading. So now when we talk about these numbers, we want to talk about some significant numbers. The indicator that I'm about to show you and I guess teach you a little bit, and it's one of kind of like those advanced things that makes a monster difference, and it's something we use every single day in the boot camp, and I'm going to explain why in a second and how that's influencing today's opening in the market. So it's very obvious that when the massive stocks are going in the same direction, it's easier to make money. It's easier to understand when to hold trades. It's easier to feel confident and feel conviction. So what we're going to take a look at is there's only two numbers. I'm going to talk about how to use it first, and then we're going to take a look at it. I want to talk about it first because it can feel overwhelming. And it's really not, because out of all the wiggles and jiggles and ups and downs and everything, we're only looking at two things: plus 500 or plus 1,000. So if you remember what I just said about 700 stocks versus 300 stocks giving us a plus 400 reading. Well, obviously on the New York Stock Exchange, for example, there's a lot more stocks than that. So because we're looking for plus 500 and plus 1,000, that's all we're looking for. So what that means is if this reading that I'm about to show you can't get past plus 500, so in other words, there's only 500 more stocks on an uptick than a downtick, that's very neutral. That means that there's nothing really going on. That's kind of like, okay, we're just hanging out here. That's normal trading, right? So plus 500 or minus 500, which would mean there's 500 more stocks down ticking than up ticking. That would actually mean neutral. So between plus 500 and minus 500 is neutral. But when you start to get up to plus 1,000, that means that at that moment, 1,000 more stocks are upticking compared to downticking. When I say upticking, means that it went from 50 to 50.01, 50.01 to 50.02. So you get that reading throughout the day. But all we're looking for is the extremes. So we're looking like at the top of that reading. So plus 500 neutral, plus 1,000, sit up in your seat. Something's going on right now. The mass of trading is happening and everybody's on the same side of the market. When you start to get up to 1,200, 1,300, 1,400, you start to get this euphoric where everybody's on the same side of the boat. So when you learn to read this kind of thing, it makes you understand when to hold good opportunities longer. It makes you understand when you should probably be adding to those positions. And here's the key, and this is a monster part. If you're a day trader right now, here's the big thing. Of course, everybody wants to understand how to make bigger money, right? However, long-term success in this business really comes down to understanding first how to not lose money, how to keep money safe when there's no edge, when the edge is very small, right? So when we're in that plus 500 level and staying there the whole day, that means that there's really not that much going on en masse and in the bigger picture in the market. Sure, the indices might be drifting higher. You might be seeing some individual stocks. And if you're good, like we are in our community, you're drilling down and getting that sector rotation. You're seeing where the order flow is going. You see where the smart money is today. You see where the attention is on the market. But we're talking about those days where there's just kind of across the board, there's not that much going on. Those are the days you need to recognize, especially if you're a day trader. Obviously, if you're a day trader, when to scale back your share size, when to scale back your activity so that you can keep that in your pocket and fight for a more obvious situation on a different moment, which could be as simple as in the afternoon. So yesterday afternoon, we kind of had again where the market was up and we're kind of drifting. And then one point in the afternoon, we kind of spiked and we set this whole scenario up for if this happens and if this happens, then this is what we're going to do. So I just want to point this out that as a day trader, especially if you're day trading, if you're watching this video and you're in front of your screen all day, you need to understand how to build the argument, how to put these pieces together. And this is really what it comes down to, where you understand, yeah, let's go get them versus, no, I'm going to go get another cup of coffee. There's not much to do over here. And I'm telling you from a long-term perspective, after all of this studying and all of my own trading, it really comes down to understanding when to trade less, if trade nothing, and then actually when to scale up, hold longer, and have bigger positions. That's really the secret. The secret is really recognizing when to do one or the other. The problem for most traders is they're always doing the same thing all of the time. And that's just not good trading. That's like saying I'm stepping on the gas all the time, no matter what. It's just foolish. You would never drive that way, but some traders seem to trade that way. So we're going to point that out very quickly, and then we're going to get into today's stock picks. A little bit of lesson there because I think it's relevant to what I want to say about the market today. The market was drifting higher. We had this big spike in the afternoon. But the reading that we're talking about, the tick reading, the New York Stock Exchange cumulative tick reading, was really doing nothing for most of the afternoon other than one spike in the afternoon, and then it came right back in and did nothing. So what I'm saying here is, as of right now, we got the gap. We're at or near all-time highs. You got semiconductor stocks breaking out. I'm walking you through. I'm teaching you in the most basic sense of how to build arguments, how to understand when to be involved, how to understand when you need to really drill down. And maybe you're just trading an individual stock that happens to be strong that day because there's not a lot going on in the bigger picture. So if we're not getting a lot of stocks going higher as the indices are going higher, that means that we don't have the mass of stocks on the same page. They're just kind of drifting and doing nothing. Right now, it definitely feels like the market is waiting for a new catalyst. And in the market in general, as we're sitting at or near all-time highs, the market has had a pretty significant bounce off the positive vaccine news. So again, you start putting these pieces together and you say, why did it go up? After the fact, we're reading the tape, we're reading the order flow, which is the easier way to trade. But now we're starting to say, okay, for the market to have another explosion to the upside, what needs to happen? The vaccine news has given us a bounce, but now what needs to happen? And it's very apparent right now that it's the stimulus that the market is waiting for. We're waiting for this next boost to the upside, and obviously the presidential election and the inauguration and getting all of that stuff completed will add to this picture. But right now, the massive stocks seem a little bit waiting. They're kind of like waiting for something to happen. So I'm going to show you what that looks like. I'm going to show you what happened in the afternoon. Probably want to watch this a little bit more, take some notes based on what I just said. And then we're going to dive into a list of stocks. We're going to take a look at the electric vehicle stocks that had some big reversals yesterday, but not enough for me to want to be carrying them. We actually nailed the bottom yesterday in the community as a day trade, and they were up almost 18%, I think, from the opening price, right around where we got in yesterday morning. But I didn't carry it. I'm not convinced that it's a longer term reversal. I want to see what we call well bid on the charts, and I'll show you what that means too. So we're going to head over to the charts. I'm going to show you the indicator that we're using. So we're going to drill down onto a 5-minute chart, and it's this one here, the New York Stock Exchange cumulative tick. And this is what it looks like. And it looks crazy, right? It looks like it's all over the place, but we're going to zoom in on only the numbers that I mentioned before. So yesterday, you could see that for the most part during the day, this is the plus 500 number, right? Let me just make it exactly 500 so that we can be on that same page. So when it gets to 500, that means that there's not that much going on. So look at the reading all morning. Really not that much going on. So we were pretty much in really drill down, really help each other find the right stocks to trade, because there wasn't the massive stocks spiking to the upside. There wasn't the massive stocks all upticking and getting buying. So that's when we scale back, work the orders, if we're even trading at all. That's when we have conversations, and especially important during the day, we have trading lessons. Those are the down moments when we in the community say, okay, bring me all of your questions. Let's discuss them now. Let's use this time together and become better traders so that we could use actionable stuff tomorrow. But then what's interesting is in the afternoon here, right around 1:30, we did start to perk up. We did start to get near that 800 to 1,000 level. Like, it wasn't quite up to 1,000, but we definitely were getting past 500. So something was happening in the afternoon. And now that translated into the SPY breaking the resistance. We had a resistance level here at 366.40, and then in the afternoon, you see the market spiked. So what we were looking for then is, as I just explained, we were looking for a spike when the ticks bounced. We got the spike. We were looking for a pause, and then we were looking for plus 1,000. We didn't get it, and the market traded sideways again. So basically what I'm getting across here is when you understand how to put these pieces together, when you understand how to be a professional trader, which again, if you're keeping your job, no big deal, that's absolutely fine. You could be a professional to keep your other job. We talk about swing trades all day. We did not get what we wanted to see in order to size up. We did not get what we wanted to see to trade bigger. We did not get what we wanted to see, which is we did not get 800, 900, 1,000 tick readings. So what ended up happening, because we read what was going on in the market, we did not size up, and we were very comfortable just sitting in those positions that we either had or doing nothing. So again, this is the 500 level. This means if we can't get past here with any kind of significant push, there's not much going on. We got past it, we spiked, and we did not push up into 1,000. So how does that translate? I'm going to come back to the screen here just for 1 second. How does that translate? How does that translate as a day trader specifically into you becoming a better trader? Remember, the whole point of us doing these videos is we want to talk about being awesome. We want to talk about being awesome every day. We want to talk about being better every day. That's great to have motivation, but what you really need actionable stuff to say, Pete, just tell me exactly what I'm supposed to do when the market opens tomorrow. This is a part of understanding how to learn to be a great trader, which is understanding when should I push it and when should I scale back. If you learn how to understand when to scale it back, you preserve precious capital, which is something I talk about often during the day when the market's a little bit slow, and then you don't have to dig yourself out of a hole when it's obvious everything lines up. We're hitting these bigger tick readings, and now the money is easier on the table because it's more obvious. You're not getting back from negative 1,000 to zero because you just made $1,000. Now you're sitting here because you didn't throw money away, and now you're making $1,000. And that's where trading becomes fun, because it's fun to make money. There's no other way to put it. But these are the little things that you really need to learn as a trader. These are the things that you need to master as a trader. But here's the thing. There's not a lot of things. There's only a few things. I'm just pointing them out now. Once you understand it, and once we're working together for a little bit, it becomes second nature. It becomes something you're watching during the day. And then, you know what? We had some members of the community yesterday. Like, I'm looking up there because that's where their community is on my screen, is where it's very exciting to hear somebody saying, you know what? I don't see anything, and I'm just going to stay in cash. That's when you know somebody is really turning the corner, and they're going to start to make money month after month after month, and position themselves to have a really exciting life, because that's what professional trading is. It's putting money in harm's way because you believe that the odds of making money are really good. Again, recognizing the difference between those two, very, very important, very important. So we're kind of mixing stocks for breakfast with the picks today. So we're going to head back over to the charts. We're going to take a look at some of the ideas that we're looking at, and then we're going to dive into some of the trades. So the top stock that we're going to be taking a look at today is CrowdStrike Holdings. If you look at the news, they're actually losing less money at a faster pace, which the market is seeing that as good news. So it's actually up 13.5%. It's trading all the way up here at 161. So it traded through this 152 level, which it failed at 3 times, and now it's through there by a monster number. If you've been a regular member of the community for the last year, basically, these earnings trades are the ways that we've been really nailing pretty good. We haven't traded them into earnings. We feel that the easier way to take advantage of these trades is wait for earnings to come out, then hop on the easier money. We had this in Kohl's last week, just as an example. When Kohl's announced, I believe it was over here, if I'm not mistaken. And then you can see the kind of ride that we had. There's no reason going in, pulling your hair out, saying, oh, I got to guess the earnings. Let it come out and then hop on ride. Like yesterday, we had CRM, which actually traded lower, continued to trade lower. If you don't short sell, no big deal. But my point is, you need to position yourself in the direction of easier trades. And that's what we're doing here. So CrowdStrike, we're going to look for follow through today. I mentioned very quickly before NIO and XPEV, both these electric vehicle stocks. We literally nailed the bottom yesterday, and that's just a fact. We were talking about it. You can see actually have the black indicator here where we're looking at it. It was one of those trades where it should be a part of your trading verbiage, strong stock, lower opening, looking for a spot to bid. We got that yesterday. We got confirmation of what we look for intraday as an entry signal. So the question is now, what do you do? We had a lot of conversation about this yesterday. I booked a day trading profit in this yesterday, but a lot of people were looking to carry it overnight. And my response was, I'm not convinced that that one-day rally is sustainable into the next move. I wanted more feedback. I wanted more proof. So today what I'm looking for is I'm looking for this stock to do this, which means higher highs and higher lows. Now it's going to open up a little bit lower, and that's probably okay because yesterday was a monster day. It was the low was 46, the high was 57.38. So a $11 trading range. $11. Wait, I'm sorry. When are we reading it? Yeah, 46 to 57. My coffee hasn't kicked in yet. 46 to 57. So pretty big trading range yesterday. Easier money to be made if you understood the setup, if you understand order flow, if you understand how to read the tape. So what we're looking for now is this. We're looking for higher highs, higher lows. Then I'm looking to initiate the new swing trade. So that's what we're going to look for today. Next, we have SPR, really clean breakout through resistance. So a lot of these type of stocks, airlines and cruise lines, are holding. That's a big deal. They're discounting. We spoke about it yesterday, discounting the future earnings and discounting the future place of where we're going to be. So now again, because this is the first time getting up to that level, I want some more feedback. I want confirmation. If the stock goes well bid again today through that resistance level, which confirms the breakout, then I'm going to look to start building a position. Okay, not jumping in full shares because of the overall world situation right now. Lyft and Uber, both of them perking up yesterday, giving us what we call energy candlesticks. We're looking to initiate new trades here as well. Boeing, we actually initiated a 1/3 of our entry on Boeing yesterday at the 223 breakout level. We're going out to a little bit higher time frames. We are looking for it to get back up to this level around 255 as the first piece. Only initiated a piece of it. Had a really good conversation with a couple of members in our community last night about why. And again, why is the biggest part. Not I want to be long. Why? Help me build that argument. Help me understand the risk. Help me understand the potential. Help me understand why I expect it to go in that direction. So we started to initiate a piece of Boeing yesterday. You can see so far so good. Pre-market, very early. We're up a couple bucks there. Next we have Trip. Trip obviously being affected by the vaccine news as well in a good way. The problem is you have this over here. The resistance is not that far away, which is only about $3.5 away. Better trade all the way up to 42. So what we'll be looking for here is initiate a smaller piece, looking for it to pause around that 32 level, and then the bigger trade, the bigger swing trade up to 42. The financials, they've been a little aggravating where they gave us this amazing signal, this bullish gap. We're looking for follow through, and now we paused for a week. However, they all closed strong yesterday. So we're just going to rattle off the group here. That's going to be in my list today. Citigroup, Lincoln National, LNC, obviously Goldman Sachs, and then also Morgan Stanley, which has been one of the top performers in our watch list that we've been keeping an eye on as far as the financials. So they're all interesting to me today. I'm looking for follow through on any or all of them, quite honestly, and most of them have some room to go. Morgan Stanley is actually at multi-year highs. So just zoom this out a little bit for you. With the next level being up at 72. So even that one, despite the fact that it's gone pretty decent so far, there's room to go. Next, I want to talk about Disney. We actually had a good conversation about Disney yesterday. Obviously, if you read or read about what's going on with the company, they just laid off 32,000 people and be like, oh my gosh, that's the worst thing in the world. And it really is. However, again, all of these companies that are in this field, they're making the shift into now their business model is a little different. Their top line growth now is a streaming service, which even Apple's getting into that picture right now. So could you imagine what their revenue is going to be when the parks actually come back? Because right now, this is mostly off of the streaming services. So this push and a pause is interesting. And yesterday was the first day into the new push. So we're going to be looking for a new entry today because we got some confirmation yesterday. And the other one that I want to talk about is Wynn. Wynn is pretty interesting too. It was stuck between 88 for the longest time. We exploded on the vaccine news, and now very similar to the airlines, cruise lines, we're holding the gap. Now we have a little bit of resistance here at 109-ish area, which is not that far away. The real trade is all the way up here for the next swing trade up to 135. So today we mixed in a little bit of advanced trading lessons, but really the whole key out of everything that I just mentioned is very simple. You want to be able to understand as a trader. It should be your desire to get in there and say, I absolutely know what I'm looking at. Now, again, that's different from understanding how to predict what's going to happen next. You need a structure that says, if this happens, there's a pretty good chance my profit target is going to get hit versus my stop loss. That's where you want to be, because Every trade doesn't work out, but if you have that argument for the majority of your trades, you're going to be in a really good position to see your account go like this every single month. And that's when, again, that's when trading becomes fun, because you know what you're doing. You are in control of what's happening. And that's really where trading becomes a lifestyle endeavor that can really give you what you want, but you really need to understand what you're doing first. It's not hit or miss. There's traders that make money every single month, month after month after month. Sure, everybody has a tough time period once in a while. Maybe you're out of sync with the market. But again, if you recognize that and scale back when it's tough, or you're not trading well, you only lose a little bit. And then when the market picks up and you get back into a groove again, now you're net positive. That's what you want. So if you have any questions, definitely leave a comment below. This is kind of training as well as stock picks. Just let me know. Absolutely let me know. And definitely subscribe to the channel. I'd really appreciate it. Have a great day, everyone.